Good afternoon, everyone. I'd like to call this meeting to order. The time is now 4:05. As a reminder, please note the board meetings are being recorded for the convenience of those who are unable to attend this video conference. A recording and closed captioning will be posted to the BERS YouTube channel following the meeting. Alex, can you please call the roll?
Certainly. Corinne Apollon,
Present.
thank you. Phoebe Shade Arnold, Tazeen Azad,
Present.
thank you. Aaron Bogad, Chantel Cabrera, Janelle Chacon, Janelle,
Present.
thank you. Lily Chan, Lily Chan,
Present. Hello.
thank you. Marjorie Dienstag,
Present.
thank you. Kari Edwards, Gregory Faulkner,
Present.
thank you. Anita Garcia,
Present.
thank you. Cherie Gibson,
Present.
thank you. Anthony Giordano, Anthony Giordano.
Mute.
Hi, Tony. We can see you, but we can't hear you. I'm
Hey.
marking you as present. Angela
Here,
Green.
sorry, here.
Thank you. Angela Green.
Present.
Thank you. Naveed Hassan. Allison Hirsch.
On behalf of Controller Brad Lander and John Dorsey is here as my alternate in case I have to jump off.
Thank you very much. Michelle Joseph. Ruth Maria Kenley. Jessamine Lee.
Present.
Thank you. John Maderick.
Alex, I'm here for John.
Hi, Nicholas Sudo, alternate on behalf of John Maderick. Thank you, Nick. Donald Nesbitt.
Present.
Thank you. Alan Ong.
Present.
Thank you. Kaliri Salas Ramirez. Mahisha Sapp.
Present.
Thank you. Thomas Shepard.
Present.
Thank you. Gladys Ward.
Present.
Thank you. And Ephraim Zachary.
I'm present.
Thank you very much.
Alex, do we have a quorum?
Yes, Chair, we do.
Thank you, Alex. First, businesses this afternoon will be calendar item number 1, noting the minutes of the meeting of the Board of Retirement System held on March 21st. May I have a motion to consider?
So moved, Tom Shepard.
Do we have a second?
Second, Anita Garcia.
First, Tom Shepard, second, Anita Garcia. Is there any discussion on the minutes? Any discussion on the minutes? Seeing no discussion on the minutes. When I say all in favor, if you wish to vote in favor of approving the minutes, please unmute yourself and respond in favor. Similarly, if you wish to oppose or abstain from the vote, please unmute yourself and respond accordingly when I call any opposed, any abstentions. All those in favor?
Aye.
Aye, Tony.
Favor, Tom Shepard.
Aye, Alan.
Angela Green. Aye, Gladys Ford.
Jessamine Lee.
Hi,
Aye,
Karina
John
Collins.
Elizabeth.
Here.
Any opposed? Any abstentions? Motion carries. Next item on the agenda is the Executive Director's update. Sandy, do you have any remarks for us?
Extraordinarily short tonight, Donald, because we have a packed agenda. I will just simply make a pitch for the NCBERS University Trustee Educational Seminar and the NCBERS Accredited Fiduciary Program, May 20 to 21st, followed by their annual conference, May 21st to 24th in New Orleans. We have a few trustees who are going and would be very helpful for trustees to attend if they can. That's enough for me. I think we have a lot of business to do. Is there any questions? I'd be happy to respond.
Thank you, Sandy. Any questions for Sandy? Any questions for Sandy? Seeing none. Let's go to the next agenda item, the ordinary business of BERS. Next item is calendar item number 2 through 17. Again, the ordinary business of BERS. May I have a motion to consider?
So
Motion to consider.
Second, Tom Shepard.
Okay, so move, motion by
Giordano.
Tony Giordano, second by Thomas Shepard. Any discussion? Well, Alex, can you please just tell us about the ordinary business of BERS?
Yes, of course. These are all the retirements, refunds, and death benefits that have been processed since the last meeting of this board.
Thank you, Alex. Any questions for Alex on that? Any questions for Alex? Seeing no questions, we'll vote now. All those in favor of approving calendar items number 2 through 17, please indicate your approval. Similarly, if you're opposed or abstentions, all those in favor, please indicate that. In favor, Donald Nesbitt.
In favor, Tom Shepard.
In favor, Angela Green.
In favor.
In favor, Alan O.
In favor, Karina Pollen.
In favor, Lily.
In favor, Anita
Any
Garcia.
opposed?
In favor, Effie Zachary.
Okay. Any opposed? Any abstentions? The motion carries. Next agenda item is calendar item number 18, amendment of the administrative budget for fiscal year 2023 for BERS. May I have a motion to consider?
So moved, Gladys Ward.
Motion by Gladys Ward. Do we have a
Second, Alan O.
second, Alan Ung? Sandy, please tell us about this resolution.
Yes, first I apologize for presenting this to the trustees on such short notice. We sent this email out to explain this yesterday. And let me first tell you that if the trustees do not wish to handle this business tonight, there is no absolute pressure. The reason I presented it on such short notice is because my interpretation of this as being a not much more than a ministerial act. In the details, DC 37 contract was approved by union members. I believe it was March 31st. The Department of Education made known to DC 37, and DC 37 made known to our members at BERS that these payments have been officially scheduled. They are all officially scheduled to occur before the end of our fiscal year. The detail was in the memo, but it includes makeup payments for 2020, 2021, a bonus of $3,000. These are payments which were not contemplated in our budget. Our PS budget is expected to be pressured by these cash flows by mid to late May. But the practical reality is these payments will be made without regard to when the trustees approve this. I suggest to you this is a little bit like we have written the check, it's in the mail, and I'm asking you to put it in the check register. But if there are any questions, I'd be happy to respond.
Yeah, I'll begin with a comment. If some of you remember who were on the board when we passed the budget, this was a part of the discussion to put monies in the budget just in case there was a collective bargaining agreement that did occur. We didn't do it at that time. And so this is just the money that should have been there and put aside for the workers who work at BERS for them to get their raise. And now that this is done, for DC 37 members, which I actually represent members there, the dates are scheduled and the payments are actually going out. But we have to have the approval of the board at some point for this money to be in the budget.
I have a quick question. This is Karina Pollen. So we're saying you do need the full board approval, or we don't, and this is going to move forward anyways. And further, if we're not able to approve it now, delaying it does not delay the payments anyways.
Correct. Actually, if we never approve this, it would get paid and we would just overspend our PS budget as established under our fiscal 2023 budget. Yep. And if there were a limit on our ability to make these payments, if there were, we would face that limit probably mid to late May. We have excess monies in our PS budget that would cover these payments, but then we would run out of money towards the end of the fiscal year. But you're correct. We don't have to act. This is a little bit recording in the ledger what is going to happen and cannot be stopped.
Okay, I just need a little bit more time because I'm just seeing this now, so
Yep.
that's why I'm
Sorry
asking.
about that.
Thank you.
We can act on May 9th. If there's any doubt in the minds of trustees, let's let it sit and we'll act on May 9th, the next board meeting.
Sandy, if I may, I just have a quick question.
Certainly.
So just to confirm, this is just the percentage, the piece of the staff that's DC 37 represented, not the, typically, as we see with many agencies, management follows suit, but usually after the mayor signs some type of executive order to that effect. So I just want to understand that it's just the DC 37 members. And my other question is, are there other collective bargaining units that are employed by BERS that we would wait for, like the CWA contract, for example, or something else to come? Just trying to understand the background there. No, no objection. Let me just say, no objection. Yeah. DC 37 members getting what they deserve. Yeah.
Yep. The numbers, as I distributed in the email I sent out yesterday, were sourced from DOE payroll department. They are specifically accumulated numbers for DC 37 members, represented members who work at BERS. And there will be other contract settlements. It does not contemplate a managerial increase, as you would indicated, John, would require the mayor's approval. It does not include that.
Thank you for the clarification, Sandy. Appreciate it.
Yep.
Yeah, thank you, John. I would just ask everyone moving forward that we do wait to be called on, as there are others who had their hand raised. I actually didn't know who was asking the question. I saw Effie and then Tom Shepard.
I just want to clarify, are there any similar payments coming up before the end of the fiscal year? And I also want to double check, is the fiscal year ending at the end of June?
Fiscal year ends at June, Effie, and as far as we know, there are no special payments coming up other than that which was settled in the DC 37 contract.
All right.
But it could.
For that reason, that's my opinion. I see no reason to delay the decision to later. Might as well get it done. That's my opinion.
The question earlier about who we have working at BERS, we have UFT and staff analysts working at BERS. So if those pass before the next fiscal year, then you come back as well.
Thank you, Dane. Tom?
Thank you. So if there's no reason, well, I see it this way, right? Like if it's money that is basically money that is required that we spend, I would, like it if folks had an opportunity to digest this. But, that said, I also agree that, if this is a more administrative or I think you used the term ministerial function, I would not be opposed to just voting on it as well.
Are there any other questions or comments?
I'm just trying to lower my hand. That's all. There we go.
Greg?
Yeah, I just want to join in and say, yeah, I think we should approve it today. I don't see any reason why we would need to delay. I think, I think you mentioned, this was something that was presented to us before. There was some increases or that should have been available. So I don't want to send a message that we just want to delay further. I think we should just go ahead and approve it.
Thank you, Greg. Any other questions or comments on this item?
Call the question.
Seeing no other hands, let's go to a vote.
Chair, I think someone else spoke. I didn't catch who that was. Did someone else speak?
Tony.
It's Giordano. I should call the question. It's fine though. I'll retract.
Thank you, Alex. I think we should go to a vote at this time. If you're in favor, please indicate that. If you're opposed, please indicate that. And if you want to abstain, similarly do so. So all in favor, please indicate your approval. In favor, Donald Nesbitt.
In favor, Greg Faulkner.
Tom Shepard.
In favor, Dick Soto.
Favor.
For Allen.
Aye, Giordano.
Audrey Rubenstein.
Any
favor, Anita Garcia.
any
Favor, Gladys
opposed?
Ward.
Any opposed? Any abstentions?
Aye, Controller's Office.
Okay. The motion carries. Our next,
Corinne in favor, sorry, I was on mute.
okay, thank you for that. Next business to be conducted here today is an attorney-client session. May I have a motion to enter attorney-client session?
So move, Tom Shepard.
Seconded, Effie Zachary.
So moved by Tom Shepard, second by Effie. All those in favor, please indicate that. Any opposed or any abstentions? In favor of going into attorney-client session, Donald Nesbitt.
Favor, Anita
Favor,
Garcia.
Chanel.
Favor, Gladys
Aye,
Ward.
no.
In favor.
In favor, Corinne.
Favor, Effie Zachary.
Rubenstein.
Any opposed? Any abstentions? Our next item of business this evening is calendar item number 19, investment strategy overview. May I have a motion to discuss?
I make a motion to discuss Anita Garcia.
Anita
Second,
Garcia with the
Effie
motion.
Zachary.
Do we have a second?
Second,
Tom
Effie.
Shepard. Oh,
Second by Effie. Thank you for that, Effie. Antonio, can you please provide this overview for us?
Absolutely. And can everyone see my screen?
Yes.
All right. Good afternoon. San Antonio Rodriguez, Director of Investment Strategy. Before I begin my comments on BERS investment strategy, did want to just update the trustees on decisions made by the Executive Committee in the previous quarter. You'll hear from Steve Meyer, CIO of Bureau of Asset Management, after this on performance. So really quickly, the Executive Committee approved 8 funds in Q1 2023, 2 funds in January, as you can see on the slide, and we approved 3 funds in February and 3 funds in March. So let's get to the meat of the presentation. And I have to say that, this presentation has been a long time coming. And as I was thinking about what to say, one question kept popping in my mind, which is, how did we get here? And I mean that in 2 senses. I mean, how did we get here from a actual department standpoint, like why was the investment strategy department created? But then also, how did we get here from a more holistic standpoint, right? From a broader standpoint. I really think that, long-term, figuring out how we can have a solution that really works for all stakeholders is incredibly important. And so this presentation is going to have a little bit of history, a little bit of context, a little bit of high-level portfolio talk, and then some pathways for the future, because I do think there is a path forward. So like I said, we have the history and context. Then we're going to talk a little about the BERS governance and policy, asset allocation and portfolio construction, manager selection and projects, and then moving forward. So starting off to give a little bit of history and context, and I have to say that in the case that there are any opinions stated, these are my own, right? My view of things, not necessarily the view of everyone, but my view on how we got here. And so in my mind, 4 events were really the catalyst for the creation of the investment strategy department. The creation and expansion of the panel on education policy, the development of what I call the pro rata system when it comes to allocations, the creation of the common investment meeting, and then the end of email voting. So this board has continuously expanded with changes to the legislation allowing for mayoral control of schools. When it was the BOE, the Board of Ed, there were 7 members of this board, and that has since expanded to 27 board members. Much bigger board, and in turn, a lot of demands on your time, in particular for the folks on the PEP who are volunteers. The pro rata system. So what the pro rata system is a way of allocating kind of commitments from all of New York City retirement systems to each of the 5 systems. BERS is by far the smallest of the 5 systems. And so our pro rata share of any commitments to managers are typically smaller as well. And prior to that, it was kind of much more open. And BERS actually has historically always been more comfortable with larger commitment sizes relative to its sizes, to its corpus, to its assets under management. And so the pro rata system, what happened is it dropped BERS average commitment size by 33% overnight. And so even when BERS was a lot smaller, they were historically making larger commitments. And then the pro rata system made it so that the commitment sizes dropped considerably. The creation of the common investment meeting meant the end of individual system meetings, meeting jointly. And I think there are some really good aspects of meeting together. BERS still meets with NYCBERS to see manager presentations, but it also, the end of the individual system meetings for managers also had some issues that we're still working through. And then finally, the end of email voting made making quorum far more important. So as the board was expanding, when we want to make quorum at a meeting, we were able to send in email votes in order to approve particularly month-to-month decisions like investment managers. The end of being able to email vote and having to ratify everything at an actual full meeting of the board became an issue, because especially when we were meeting fully in person, that means a lot of decisions could not be made till the next in-person meeting, particularly when there are deadlines like fund closing commitments. And so with so many stakeholders, I think governance will always be a challenge for any system, but ours in particular. So U.S. trustees are the ultimate fiduciaries. The Bureau of Asset Management is the investor advisor and custodian. The state legislature sets benefit structure and discount rates. The actuary sets contributions and recommends discount rates, and the city and the DOE are the ultimate plan sponsors. So you have a lot of different organizations and agencies that all have a view and all have set a portion of the guidelines that ultimately drive investments and investment strategy. So what do we do about all this, right? And what did we do about all this? And so our attempt, and I think both for the executive team and the Department of Investment Strategy, thought that the Division of Labor was our attempt to kind of manage this unique structure. And so the board would think about kind of the big picture items, asset allocation, hiring of consultants, and the like. An executive committee made up of a subset of the board would do month-to-month decisions and in-depth discussions about big picture issues. And then staff, this department, would digest and synthesize those, all of the voluminous amount of information that you receive to an executive level, to a subset, those key points. Incorporate BERS specific considerations, which we talked about a little bit, and we'll talk about more later in this presentation, and also to do some of the maintenance work that was important to the plan, but may not be may not be under necessarily a spotlight, so could easily be overlooked. So I just want to tell you, like, when I got here in 2008, 2018, excuse me, the IPS had not been fully updated at BERS in nearly a decade. BERS did not have a private markets consultant. There was little to no historical record for investment decisions. The board meeting was an hour before the PEP meetings, so we were barely able to get through the calendar, particularly for a meeting at schools that were further out, right? So if we had a meeting in, say, Staten Island or downtown, it'd often be tough for folks to get off work, then come to the board at 5 o'clock, and then prepare for a long panel education policy meeting. So we were barely able to get through the calendar. So that meant there was, of course, no time for higher level discussions, right? Just getting through the manager calendar was a lot on its own. And then, of course, there's voluminous amounts of information that you receive, manager reports, performance reports, and the like, that sometimes could be as much as 600, 700, or 800 pages that you'd have to get through in addition to all the other work that you'd have to do. And so before I go back, certainly we hired a private market consultant, one of the first things that we did. But in addition, we went about trying to reform the investment policy statement, and we turned what we thought was really a prescriptive document into a high-level policy document. And we took really two other documents as inspirations from the Bureau of Asset Management in order to develop this principles-based IPS. The first is the proxy guidelines from the Office of Corporate Governance, headed by Mike Garland. Our old proxy guidelines for the systems were pretty prescriptive, essentially saying, for this issue, do this. For issue, do this, versus saying, here are our ultimate principles, and you're able to be flexible given the given changes in the market, given the changes in kind of corporate governance principles. And then the statement of investment principles was developed, never ratified, but developed by a prior chief investment officer at BAM, Scott Evans. And what I like personally about the statement of investment principles is that it took what could sometimes be pretty difficult language in the IPS and turned it into things that could be readily available, and acted more kind of as a principles and kind of manual versus something that was hard and fast prescriptive. And it got rid of, I think, of a lot of the verbiage to make it easier to read in much more plain language. And so we use that. There's a few folks still on this board or as alternates, Russell Buckley, Donald Nesbitt, John Matterich, who are around for the IPS review process that took some time and ultimately was ratified first in 2020 and then again in 2021. In addition, I think the executive committee which was created in 2020, could spend more time on those bigger picture issues, right? It's a separate meeting, 2 hours, third Thursday of every month. Of course, when we had met just in front of the before the PEP meetings, essentially 100% of our time was devoted to manager recommendations, because that's all the time there was to get through the calendar with all the other things that were on the calendar each month. And when I was at the mayor's office of pensions and investments, we also did an analysis and saw that about 70 to 80% of the time was typically spent on manager selection. So we looked at all of the calendars we've had since the inception of the executive committee and saw how we divided our time. So as of now, about 33% of time is spent on manager selection. That allows for more time spent on other things. So 32% of the time has been spent on governance and policy. 25% of the time has been spent on asset allocation, asset liability modeling, or portfolio construction, and 10% on performance and risk. I would say that 10% is still too low. And I think, certainly we'll have a discussion later today from Steve Meyer on performance. We'll have a supplemental module for you all on Thursday, but that's one area that I think does need to have. But we were able to have that, 66, 67% of time, which we really did not have meeting before the panel for education policy, now devoted to those bigger picture issues. In addition, we've tried to facilitate additional access to information. So we procured an investment book of record system, and that makes portfolio information more readily accessible and allows for the, I think, really easy slicing and dicing of portfolio analytics. We synthesized the manager write-ups for folks to get the bigger, and we want to move to kind of exception reporting in that regard. And then we've had the SharePoint site for additional information. Given the size of the board, and there's not enough licenses on Convene for all board members to have access, and so you have access to that material through the SharePoint site. So then, from a governance and policy, I think we also try to reform or reimagine how we think about asset allocation and portfolio construction as well. So before we even dive into like investments or investment strategy, I think it's really critical that the trustees, the board, understands several key plan characteristics for BERS, and some of these are plan characteristics for all of the systems. So at the top, the sponsor always plays the ARC. The ARC is the actuarially required contribution. This is by far the most important characteristic of our plan, right? The fact that, and Merrick's on today, the sponsor puts in the money. That is such a key component of a pension plan. The sponsor putting in the money means you always have a chance, right? It means that you're not questioning whether or not you pay. It is by far the most important aspect, and it is I think a critical aspect to the success of the New York City retirement systems. Returns are smooth over 5 to 6 years, and what does that mean? That means that market volatility does not translate into changes in contributions right away, right? That ultimately returns are smooth over that time period. Through that time, that allows kind of up markets, down markets to smooth out to have a more stable contribution. BERS went cash flow negative in 2021. That means that we are now paying out more in benefit payments than we are receiving in contributions between the city and members. Importantly, that also means that we're capital positive prior to that, right? And that's a key component for BERS too, during the 12 years after the financial crisis, still taking in more in contributions. The fixed CDA, which pays an 8.25% guaranteed return, is 28% of the pool of assets. That's important that 28% of the assets have to earn a higher return than our discount rate. That's an important component. There's a legislative cap on alternative assets, was 25% and is now 35%, but historically that meant that limited the amount that could be invested in alternative assets. In New York City, dropped its discount rate from 8.25% to 7% in 2011, and ultimately we amortized the additional payments, additional contributions over that 22-year time period. That's coming to an end in 2033. COLA is 50% of CPI from 1% to 3%. That's important because sometimes other systems have fully indexed benefit payments. That means we're not as inflation sensitive on the benefit side. And in addition, there's thousands of potential new members. All of these are important characteristics when it comes to things like cash flows and how sensitive we are to market volatility. And those plan characteristics, we believe, drive investment strategy. BERS has historically and today has a larger percent of its portfolio in growth assets. As a result, on a one-year basis, BERS typically has had the highest measured standard deviation of the 5 New York City retirement system. So you'll see it as volatility. We have the highest typically have the highest one-year volatility of any of the systems. How we think things change if we define risk as the probability of not reaching our goal. That essentially, because of all those plan characteristics, we are able to bear market risk, and that means that the risks we should think about are we going to reach our goals, which is to have a high funded ratio and pay pensions into perpetuity, right? And hopefully without too much volatility in our contributions. And so that means that we believe modeling needs to be multi-period and specific to the plan on the margins. Again, because benefit structures are often the same, it's mostly going to be similar, but on the margins, things need to look different. The modeling needs to be specific to each plan. So the last asset allocation, we really leaned into growth. We increased alts, we increased our U.S. overweight, so we have more in U.S. stocks than in international stocks, and we increased our credit allocation versus government fixed income over time. And folks will see more of that on Thursday. One thing I'm really proud of is that we are able to conduct New York City's first asset liability study and first cash flow analysis. So in June 2019, we did our first cash flow analysis, so looking at the inflows and outflows stretching out for 40 years. We did the asset liability study with Siegel Marco Advisors, completed in May of 2021. We did an enhanced cash flow analysis, and I'm going to be thanking the city's actuary's office and Merrick a lot for all the work they've helped us with. We did an enhanced cash flow analysis in April of 2022. That enhanced cash flow analysis allowed us to see the inflation sensitivity, not just for current retirees, but then future beneficiaries when it came to outflows. And then, again, with the help of the city actuary's office, it was a stochastic open plan actuarial model, which we think will be really helpful as we're planning around the asset allocation and seeing how the co-movement of liabilities and contributions with changes in targeted return and volatility and the like. So, this is an area that I think is critical for us doing our analysis, and really thank the trustees from before and today in backing us in doing this work. One thing to note, and I think this gets into more of kind of the gritty of how we go about thinking about developing a solution for all stakeholders. And really started with the implications of the 2021 asset liability study. And the implications were that getting to policy was paramount. So Siegel and Marco's advisor at the time analyzed several different portfolios to understand their characteristics and average and worst case scenarios, again, from an asset liability context. And what we saw is that getting to policy in both median and downside scenarios was better for the portfolio. And so usually there's a trade-off, right? That usually if you want to have better median results, oftentimes you'll have worse downside results and vice versa. But in this case, we felt that there was sort of a free lunch in that regard. So we explained this and talked about this with the Board of Trustees, the Executive Committee, and in 2021, the board passed a plan to get to policy targets, and that entailed several things. First is the commitment sizing, increasing the minimum to $25 million. BERS had an informal minimum of $10 million that came out in 2016. after kind of after the pro rata system, and there were some funds where BERS was getting as little as $2 million in commitment size. Pacing, we historically 5% had been used for planned growth rate for pacing assumptions. We increased that to 7% because we're not just captive to outflows and the return on assets. We are also captive to the flows into the tax deferred annuity, right? And so even if we have 1% outflows and we're thinking we have a 6% growth rate, planned growth rate after outflows, with the TDA, that actually our ultimate total asset perspective, the planned growth rate was higher than 5%, and so using a 5% growth rate assumption will often put us behind on pacing. We analyzed the parking places for real assets, and this was a place, this is somewhat controversial, but the idea about being overweight core fixed income, especially at that time, was not was one of the things that we thought was potentially would potentially was essentially basically, if you're being overweight a lower returning asset on the long term, you're going to get a lower rate of return. And so our thought was, if we could find open-ended or listed alternative to real asset parking places, that would be more optimal than the current construct of real assets. And then finally, we started analyzing the appropriate level of active risk. And so thinking about the active passive decision, how much active risk do we need to take if we can get to our goal using mostly beta, then we should, because it's cheaper. And so that led us to what I think has been historically kind of the most contentious issue, which is manager selection, and then other projects that we've been working on as well. And before I get into that, I actually want to say that we're largely in agreement. I think BERS has historically been largely in agreement on manager selection. So I think the idea that everything is contentious around this is certainly not the case. That the Bureau of Asset Management, as our investment advisor, is the conduit for investment manager recommendations. And since 2018, about 90% of those recommendations have been approved. I think it's actually a little above 90%, but essentially 90% of those investment recommendations have been approved. To the extent that there have been rejections of those recommendations, they've been rare, and they really fall into 4 categories. The first is sizing, right? So, if it's been below $25 million, it's been rejected at times. If the board felt that there was unacceptable headline risk, that's happened from time to time as well. Fund-of-fund structure, so the additional fees in asset classes. And so there have been times, especially in asset classes that don't have very, very high returns, that the additional fees may not be warranted. And then, it did not pass the consultant investment committee, right? So those are really the 4 buckets. But like I said, I think oftentimes when we talk about contentious issues or we talk about disagreements, I don't want that to cloud that on almost everything, right? Not everything, but almost everything where there's been agreement. And I don't think that should cloud how we view talking about investment strategy, how we talk about customization in that regard. And so this is really the question, right? Like, I think that kind of gets down to it. To the extent that there have been independent investment manager recommendations, they've been episodic. So in the portfolio, the Mesro private equity funds and Franklin Templeton real estate historically, those funds were selected as BERS was getting their private equity and their real estate funds off the ground. Historically, BERS has always been the last of the systems to enter into private markets in almost all the private markets. So while you'll see at some of the other systems, private equity going back to 1999, BERS' real first foray into private equity was in 2006. And then again in 2008 and 11, and really didn't join kind of that system until after that fact, until around 2011. Same thing in real estate. BERS didn't have a real estate program until 2011, and first manager in it was Franklin Templeton. And then episodic, again, we have the global listed infrastructure. Again, we talked about as a alternative for parking places, and then the Base 10 Advancement Initiative, which again, from our perspective, was how do we our attempt to implement some of the goals established by the Board of Trustees around diversity and inclusion, and in global listed infrastructure, again, the goals established by the Board of Trustees with regard to the parking places. But I think it's clear. It's clear to me. It's clear to a lot of folks that we need a solution that works for all of our stakeholders. And so, in addition, so I want to say, had a lot of discussion about portfolio construction, asset allocation, governance policy, but there are also a lot of other active projects that we've been working on. And so in research, we've been, and I think having an independent research arm, being able to research key questions, I think is something that really all kind of investors should think about. So we've been doing some research on custom ESG analytics and right sizing commitments, and are those different for each asset class for a minimum and kind of target commitment size based off of the characteristic of the asset class. On the modeling front, been working on market volatility and its relationship to contribution volatility. So essentially, for a 1 or 2% increase in market volatility, what does that mean for contribution volatility? Is that a 1-to-1 ratio? Our view is that it's not really a 1-to-1 ratio. And so, but what is that ratio? So for a given level of, volatility in the portfolio, target volatility, let's say, what's the difference between 12 and 14%, holding returns constant? So Lil's been working on this, and you'll see this on Thursday, investment liability modeling, how to think about and augment the strategic asset allocation through, again, the co-movements of assets and liabilities. If we're looking at it from a funded ratio standpoint versus just a pure mean variance optimization standpoint, what are those, are there particular trade-offs? Are there ways that we can enhance that process? We've been working with the member communications unit, and I thank Kristen and Keyshawn for leading this work. So we've been working with them on social media posts, and a lot of this has to do with the fact that we do have voluntary members. That how do we get people to join the plan? And also the member communications gets questions about investment sometimes, and so helping them answer those. So thinking about how we can help in future in-person sessions. We have we've got a column in the BERS Words newsletter as well, where we just talk about things like definitions of IPS and the like. Working on the defined contribution plans, so the variable TDA, which is currently invested with the teachers' retirement system. It is rules and regs that we at least review this every 5 years. And then colloquially, the chancellor's plan, which is the executive director of BERS. So Sandy is the administrator of this plan. It is a small plan that we also do have some assistance with, given Sandy as the administrator. And then annual trainings, right? And so we did our last trustee onboarding in May. We're hoping to have one again this year. And then we developed a glossary for onboarding trustees. So, I mean, this is not a question to answer right today, but it is a question I think that comes with everything I've presented today. How do we move forward? And how viable is customization? Again, given in a context where 90+% of the everything's kind of in agreement. Who bears those costs, right? I think that the idea, again, what we try to do, or what we're trying to do, is figure out, how do you pay for customization, right? How do you think about ways in which a individual system sees things differently than the other four? How do you implement that, right? Like, is it implemented internally? Is it implemented in combination, right? That's I think a big picture question. And so obviously the STAR committee, I think, can answer some of those questions. And that's kind of the basis for a lot of those discussions. But today I just wanted to give a general overview to the new trustees and some of the ones who've been around too, for the situation prior to 2018. Kind of how we view the world, what we've worked on in that interim period, and then how do we move forward in a way that I think both allows us to be collaborative and at the same time gives trustees, all trustees, comfort in how what could be unique views are implemented, and that takes into account the positions of every Board of Trustees member. So that's my presentation. I'm happy to take any questions. I'm happy to, like I said, I sent a copy of those, but I wanted to kind of voice this. This has been I'd say a long time coming, but we have been having a discussion about doing a presentation like this for some time, and I'm certainly interested in feedback. But ultimately, I cannot stress enough that we are in an environment of a lot of agreement, even as on the margins we have some differences of opinion. So thank you, and with that I'll open it up, Donald.
Yes, thank you, Antonio, for that presentation. As throughout the presentation, for me, it actually brought back the reasons why we actually moved towards doing something like this. I still stand by the decision of us as board members at that time that made a decision to create this internal team. To elaborate a little bit more, I do want to thank you for your leadership and the leadership of at Birds for being visionaries and actually doing this, and just seeing some of the former team members who have excelled within this industry, like Eva Lees, and looking at some of those who have moved on, just brings the light to me that we actually moved in this direction. So any questions for Antonio on the presentation? Tom?
Thank you. I'll make this quick, and it's really just 3 points. I've been taking notes during the presentation, and maybe they won't be answered today, but I just wanted to flag them. One, you said that since 2021 we've been cash flow negative, and that's basically, like you said, like we're paying out more than we're taking in, right?
Mm-hmm.
And the first question would be, how long do we anticipate being cash flow negative? And if we're paying out more than we're taking in, it would seem to me that a lot of that has to do with the current system in terms of membership, right? And what are we doing to outreach to new members, right? So that we can perhaps reverse this cash flow negative situation. And then the last one is around annual training for trustees, right? So with the current change in mayoral control, members are reelected or reappointed yearly. So I would just respectfully submit that this training should happen every single year. That's all I got. Thanks.
All right. So I'll answer them one at a time. So first, we are, and this will answer 1 and 2 together, I think. We're never going to go back to cash flow positive, right? Like we're a mature plan, right? And so, and I don't want folks to think that cash flow negative means bad, right? It just means that, at some point, at any time, there's going to be more people who are retired than and getting benefits, and not even more people, but the combination of their benefits is going to be their benefit payment is going to be higher than contribution. So I would say never. And that essentially, again, cash flow positive negative does not mean bad, right? It just means that we're paying out because that's why you have it. That's why you invest, right? And if I say that you've been able to keep up long term with the and even grow kind of that funded ratio. And from time to time, that means benefits may change and so forth. But yeah, no. So we did a little bit of analysis that if we were to get every member in BERS that could possibly be in BERS, and this is this is sticky. So I mean, this is I think there's a lot of wiggle room here, but it would have given us like 1 more year of cash flow positivity, right? Like essentially, I think in that very first year, I think we were in net negative $28 million. And then I think moving forward, right? Yeah, it's just, I don't think we'll ever get back to there, but as long as we have a very low payout ratio though. So I think I don't know if it's even crossed 1% yet. So I wouldn't worry about that. And then on the final question, I agree. Again, we did one in May. We had done one in the previous years. I'll be honest, Tom, the turnover in the first year made it almost impossible to do a training where it was almost like we didn't, I'm trying to think how many people are left from the training we did back in May who attended. I want to say certainly more than half the board has turned over since then. And so that was one of the issues where we weren't sure people were even going to, we wanted to set roster before we could even reach out to folks. And so I think, if things are at kind of their steady state, we'll figure out how to make that happen.
Are there any other hands, any other questions or comments for Antonio? Any other questions?
Chair Nesbitt, I see Effie and Corrine.
Okay, thank you, Tom. For some reason, I got the participants here, but I don't. So Effie and then Kareem. Thank you, Tom.
Thank you, Donald. So Antonio, I think this was a very good, concise presentation for the given time that we have, and we have a busy agenda tonight. I would say if anything jumped out at me that's a bit concerning is that we seem to be spending more than triple the time on governance than we're doing on risk and like risk and performance, which is really like essentially like maybe the most important thing. If we perform very well and the risk is manageable, everything else kind of takes care of itself, right? Like we do everything else to make sure that we attain good returns and reasonable risk. I personally like the idea of also trying to match flows and probability of delivering the benefits we need, as opposed to just like kind of traditional portfolio modeling, like with risk, because it's really the mission is to deliver benefit at the end of the day. It's not to just maximize returns. So I like that approach. I would like a little bit more information, and we don't need to do it now because I think we should move on, and I don't think that many people are really too interested in. I would like to get a little bit more information about the stochastic open plan actuarial model, like what was stressed, what variables were looked at. But I think we can do that at another time. So I would say my overall impression is I think I don't know what was happening a few years ago, but from what I'm hearing, it sounds like we are moving in the right direction, and that's very encouraging. Thank you.
Absolutely, Effie. Come on Thursday. So Salil will be talking about his investment liability modeling. I said I can't give enough kudos to the city actuary's office. I can't enough, right? And all of our stakeholders, right? The Bureau of Asset Management, like all of them working together to do this. I think it to me is like I said, I that's what I want to emphasize more than anything else. But come if you can make it on Thursday at 1 o'clock. Salil will be going over his model. And we have a copy from Max. I would love to have the city. You can talk to the city actuary's office. Said they did the bulk of the programming, and so kind of what they looked at. And I think the open plan characteristics were really, I think, key for us. And I think we asked for something and they delivered. And so we Merrick, again, we appreciate that wholeheartedly. So absolutely. So if you can make it on Thursday, Salil will be talking about somebody's work.
Thank
you. Thank you, Effie. Kareem?
Yeah, I think some of the questions I was going to ask were also already asked, so I'm going to defer. But one thing I was going to say is, can we get a copy of this deck and then look forward to the next trustee training?
Absolutely. So yes, and so it should have been in your packet. If not, I will make sure to resend this. Absolutely.
Okay, thank you.
Are there any other questions for Antonio? Any other questions?
Donald, there's one question in the chat from Allison.
Tony G.
Tony, Antonio, if you could take a look at the chat, Allison asked a question, and then
absolutely,
Tony has his hand raised.
He also has had his hand raised.
And I did too.
Allison can always go before me.
Okay, yes. So the pro rata system. So pro rata went into effect in I want to say that pro rata went into effect during Lou's administration. I don't know if John has that. This was slightly before my time, but I believe it went into effect in, if not around 2011, 2012-ish, was the first indication I got just from looking at records, but it might have been a little later than that, but around then.
Got it. Thank you. That's helpful.
It predated everyone here.
Yeah.
Tony and then
almost everyone.
First and foremost, my favorite football coach of all time was Coach Tiskevich in Sayreville, New Jersey. So I look forward to meeting the actuary in person someday soon. But Antonio, I was a fan of yours from before I was on this board, and this was fantastic. I was going to ask also for a similar a copy of this deck, because the mayor's office actually wanted to make sure that our trustees are being trained, and a lot of us didn't know that we were going to be on this board when we were appointed to PEP. So I think a couple of us, Effie is also very well versed in finance. We should work together and maybe do a couple of teach-ins for the rest of our crew. So everyone's at least familiar with some of the jargon that we use interchangeably that we don't realize that we're even using at times. So just to be a good fellow board member, but thanks very much. I mean, you in my opinion, BERS was a feel-good story of the U.S. pension industry. I mean, you've shown that using the power of BAM, working around the edges. What's the funded rate now?
One thing I'll say, Tony, is that our funded ratio is our asset allocation, right? And the fact that the city puts in the money and we had demographics. And so that's just one area where I always think that like making that crystal clear. It's 98% now, but again, that it is so many factors go into that, right? That I think it's critical that's not again that one chart of city puts in the money, and you know this being in the industry, the city putting the money is everything.
Right. Well, it's, you know, you're being modest also because it's an unheard of ratio and it's one of the highest in the country. And I know you were up at 120 at some point, you know, before the market did.
So we love equity, but it helps you and it helps you and it hurts you. But like I said, that is a function of a lot of things. Ultimately.
But you know, but also the fact that we've committed to having Black and brown people and representing the people who are beneficiaries as well, and having managers and staff that actually look like the people we're representing, I think is huge. So kudos to you guys, and again, like Donald said, being visionary. I think it's a very good team. Thanks.
Alice?
Hi, Antonio. Thank you for the presentation. You answered probably part of my question when Tom's question about being cash flow negative starting in 2021. And I understand it's not necessarily a bad thing, but my question is on sustainability. And how do we sustain the payments going out if this is not what if we're not receiving what's coming in? So where is the bucket, or not how are we sustaining, what's the line item, the budget line item, how are we sustaining the payments going out, and how does that
it's all investments. It's all investments. So it's the work of the bureau, it's the work of that's it. It's entirely going to be return on in investments. Now, you know, the contributions keep you in the game, right? And that's what I said in the beginning, like the sponsors keep you in the game, knowing kind of having that kind of payment certainty. So it's the work of, again, the bureau and their team. It is the oversight of you all. It is everybody working together. It's to make sure that happens. But ultimately, that's why there's an investment to begin with, right? Like that's why there's an investment program. It is, you know, actuary, state legislature, everybody working together. You know, the city putting in the money, you know, the asset class heads picking good managers, like all that stuff together is what I think sustains the plan, even when you go into a scenario of being cash flow negative.
Okay, thank you.
Corinne, is your hand raised again, or was that from before? I guess it was from before. Okay, are there any other questions from Antonio before we move on to the next item? Any other questions? I don't see any other hands. Thank you, Antonio, for the presentation once again. Next on our agenda is calendar item number 20, performance report by Steve Meyer, CIO at BAM. May I have a motion to discuss?
So moved.
Tony with the motion. Do we have a second?
Second, Tom Shepard.
Second, Tom Shepard. Steve, your presentation.
Terrific, Donald. Thank you for that introduction, and good afternoon, trustees. It's a pleasure to be here. I appreciated Antonio's remarks earlier, and I have to say, through the last 10 months of my being in this position, it's been a pleasure to get to know and work with Antonio. So we're always hoping we can work more collaboratively and get better outcomes for the trustees and, more importantly, the beneficiaries and plan participants. I'm just going to give you a very brief update on preliminary performance. So typically what we do is we do a deep dive and provide quarterly performance reviews with a 2 to 3 month lag. Those performance reviews typically are audited, but what we traditionally have done, and we hope to continue doing, is providing just preliminary results of where we are, what's going on in the market, very briefly, and where we are from an asset allocation standpoint. So just a quick update on your performance, your fund's preliminary performance, again, not audited, month to date through April 14th, as well as fiscal year to date, again, dating back to July 1st of 2022 through the 14th of April. Maybe just a couple quick remarks. I mean, market volatility in 2023 certainly peaked in March, but has calmed down significantly in early April. These are early days from a credit standpoint. I don't think I wouldn't look for a banking crisis per se. Nothing certainly in the magnitude that we saw during the global financial crisis in 2008, 9, and 10. But I wouldn't be surprised to see additional disruptions occur over the coming months. I think you're paid at this point where you can be to be defensive. These are very uncertain times, certainly for the U.S. and global economies, but also tangentially to the financial markets. This uncertainty is driven really by four factors. Firstly, questions on expectations for economic growth and inflation, the impact of Fed interest rate policy on the economy, the impact on Fed policy on asset valuations and prices, and more recently, the impact of the bank disruptions we saw in March of this year on valuations and economic growth over time. So again, a lot of uncertainty. The Federal Reserve Bank actually meets again on May 2nd and May 3rd. Right now, the market is pricing in another interest rate hike of 25 basis points, bringing what might likely be the terminal rate, meaning the final hike, to a 5 to 5.25% range. And that's what Fed Fund futures prices are indicating today. Year to date, however, again, starting from the beginning of this calendar year to date, most major, I should say, equity indices are actually up. The S&P 500 index is up fully 8%. The Russell 3000, a more broad index of U.S. stocks, is up 7.5%. The NASDAQ 100 is up almost 20%. And from its October lows of last year, it's up well over 20%. Technically, that's a bull market in equities. European equities are all up in the mid-teens, so nice recovery there. Japan's Nikkei is up a little less than 10% year to date. And China's Shanghai Composite Index is up about 10%. Now it's been volatile, and I'll quote Warren Buffett, who's come out and said, "I'll take a hard 12% return over an easier or smooth 10% return anytime." So even though it's been a volatile and challenging marketplace, at least directionally, we're moving higher in terms of valuations. U.S. Treasury 10-year yields today are 3.60%. That's below where they started the year, but about midway, about in the range that we've seen them trade year to date. That range runs from 3.30 to as high as 4.05%. That's a key rate. A lot of corporate loans, mortgages that you or I may take to buy a house or refinance a house typically would be keyed up to 10-year yields as well. We've also seen investment grade and high yield spreads widen and then tighten a little bit more recently. So from a preliminary performance standpoint, again, looking at it month to date through the middle of the month or April 14th, the Russell 3000 was up 0.5%. The MSCI World ex-US, meaning a developed market index, up 2.7%, again, in just that 2-week period. And emerging market equity is up 1.1%. So it's been a fairly decent recovery following a tumultuous March. In yield land, we've actually seen bonds trading off a little bit as yields have drifted higher. There was a flight to quality, and I'd say a high level of expectations given the disruption in the U.S. banking sector about the potential for the Fed to stop raising rates sooner and start cutting rates faster, which I think is being priced out of the market at this point. And again, with all that uncertainty, investment grade and high yield spreads had widened out, and they are improving or tightening more recently in the last couple of weeks. For the BERS total portfolio, total plan for the month to date, again, just for the first 2 weeks of April, is up 0.4%. But more importantly, fiscal year to date through April 14th. Again, that's July 1st up through this past week. The fund is up fully 5%. That also includes private market mark-to-markets, about 90% of which have been marked now through the end of the year. Those are December marks. So those are fresh marks. That's a fairly good outcome, notwithstanding the volatility I talked about earlier. We're not out of the woods yet. There's still a lot of uncertainty. The Fed is continuing to raise rates. Typically, when the Fed raises rates this aggressively, something breaks in the market. There are these disruptions, and we saw some of that last year in crypto. We saw a lot of it in regional bank pricing in March, in the volatility there. But the Fed rate hikes actually operate with a long and variable lag. So, they're still hiking rates. The expectation is Fed fund futures are pricing in another hike in a couple of weeks. That'll probably be the Fed's last hike, at least for the foreseeable future. And those rate hikes tend to work with a long lag. So the full extent of those rate hikes still have not yet to be felt in the economy. So we'll see where that goes over the coming months and quarters. And it's probably a better than 50% expectation for at least a mild recession in the latter part of this year, perhaps going into 2024. That's all I really have on preliminary performance. Just a very quick and brief update. We also typically talk about our under and overweights, but within the Bureau of Asset Management, we are not taking liberty with the allocations that you as board members have given us a target for each of the asset classes, which we tend to adhere to quite closely. The one exception would be cash. Technically, and within the guidelines, we have a zero allocation to cash, but on a monthly basis, on a continuous basis, we need some level of cash to meet benefit payments and also to meet capital calls associated with the private assets that you've already approved and are investing in over time. So other than that, we're pretty much right where we need to be from an asset allocation standpoint. Again, given the target allocations that you've asked it to adhere to as your advisor. So with that, I know it's very brief. I know that I probably threw a couple of terms that were probably a little more jargon than you'd hope for, but I'm more than happy to answer any questions.
And then Tony.
Yeah, I'm just curious, how much is there any percentage you usually leave for dry powder? And also, especially now that yields are higher, how do you invest the cash? Where do you invest in it? Where do you put it?
I'm sorry, with in fixed income specific, I missed the first part of your question. Effie, could you repeat that, please?
The first question was on dry powder. How much do you keep usually for dry powder? And when you have cash, where do you invest the cash, especially now that yields are higher? Before, when yields are almost zero, I guess doesn't matter that much, but now that yields are higher, where do you invest where do you put the cash?
Effie, those are great questions. So we typically don't keep dry powder per se, meaning we have a zero allocation to cash. And the thinking is for a pension plan of this type, typically cash is going to be a drag on performance. You have a 7% hurdle rate. Cash typically yields something much below that. Now, cash can be seen as a tactical asset, meaning that typically it's held for a brief period of time, going to something else, usually more opportunistically. We actually don't do that in the management of your portfolio. I think that is something that you may want to advise us to change down the road. But right now we are not building up dry powder with the expectation of redeploying it opportunistically. I think the mantra, Effie, if it's helpful, is that we focus more on time in the market and not market timing. Now, you're right. We do have some element of cash to meet benefit payments and to meet capital calls. The cash we invest typically is invested very defensively, very conservatively. So right now we're buying T-bills in the 4.5% to 4.75% range. We're trying to keep it short again because of the monthly demands that we need to meet in order to, again, make those benefit payments to those well-deserving beneficiaries, but also to meet those capital calls that we have a legal obligation to meet.
All right, thank you very much.
Sure, at any time.
Tony?
Hey, Steve, it's like, I spend every Friday morning with you. TRS, you know, you're the voice in the back of my head now.
I don't know if that's a
No,
good thing, Tony, but
well, the thought leadership stuff is great, and I really enjoy it. And I particularly like when BAM argues with our experts. That's the best part. When they disagree on some of the things. So I sincerely appreciate it. And you didn't mention inflation. We're getting a little pullback on inflation, right? Not, you know, some improvement.
yeah. I mean, it peaked in June of last year, 9.1% from a CPI standpoint. It's closer to 5% today. We have had a little bit of a move up in the core PCE deflator that is a preferred Fed measure. There's still a lot of inflation associated with services, particularly given the robustness and the tightness of the labor market. And even that, Tony, seems to be loosening up a little bit. Not a lot. I mean, we're still near historical lows on the unemployment rate. Remember, in January, it was 3.4%. That's a 53-year low. And, you know, I hate to see anyone lose their job, but on a typical Fed hiking cycle that results in a recession, there's typically a 2 percentage point on average increase in the unemployment rate. We haven't seen anything close to that. I think that's good for those individuals that are keeping their jobs. The Fed has a hard position in front of it. You know, they've gotten the inflation to come down quite a bit, but it's still 340 basis points above its target of 2%. So they still have some more work to do. I think it's going to be a challenging 2023, you know, as it was a challenging 2022. I still think, like I said, there's more perhaps pain to come, and then the market will start pricing in a recovery, and asset prices should rally afterwards.
Well, Steve, that was the softball question. This is the hard one. Just question, and I was with you even on the board when this was done. But where are we with getting First and Tier funded or moving that ball along to get that board decision done?
We haven't really done anything on First and Tier. It was a decision that was taken. We didn't underwrite First and Tier. I don't think that there's been a legal review that's occurred within the Bureau of Asset Management of First and Tier. And full disclosure, Tony, I wasn't here when that decision may have been taken.
For the purposes of this conversation, can I just jump in and ask that I don't think Steve is like the First and Tier issue, like we should have a board discussion about it. I don't know that Steve came today prepared to discuss it.
Understood.
So.
Understood. Yeah. Thanks, Steve. I didn't mean to. I wasn't a gotcha at the moment.
Tony Allison's very protective of me, and I certainly appreciate that. I am here, and notwithstanding Allison's remarks, I am here to provide a support and a service and answer questions. There shouldn't be hard questions. If there are, we'll go back and kind of figure them out. But that is one that I don't have a readily good answer for you.
I appreciate that. Thank you. Thanks for your honesty.
I see Tom's hand. I will comment on this to Tony's question and Allison's comment. This is something that I did mention in last month's meeting. So at some point there needs to be some type of answer for the board, because it is almost a year that we did vote in favor of this. So at some point.
So following last month's meeting, so a couple of things. I think there's a different understanding of the direction that BAM was given around First and Tier. That said, following last month's meeting, I followed up with Antonio and asked him to resend me all of the First and Tier documentation, information, et cetera, so that we can understand what the recommendation is, because I wasn't on the board at that point either. So we had no insight into that until after it was done, and had been under the understanding, like clearly misunderstanding, because there was difference of opinion that like there was agreement that that would be put on hold. So so Antonio had agreed to send me all of the materials of First and Tier. Like 3 days after that conversation, I went on vacation for 10 days, and we agreed to reconnect as soon as I got back, and he would get me all the materials because they're too big to email. And so he's going to get them over to BAM so that BAM can discuss and review. And so yesterday was my first day back in the office. So I want to be clear that it was not ignored at last month's board meeting. There's been no discussion with Steve on it since last month's board meeting, because I haven't gotten the materials to then bring it back. But there's sort of like a lot to unpack around First and Tier, and Antonio and I did discuss, and he's sending BAM over all of the materials.
I do appreciate that. I'll just say the ultimate authority is the board, so I don't think anybody should have misunderstood anything as the board gives the direction. But with that being said, I do appreciate, Allison, that you have reached out, you have connected, and will continue to connect on this, as this is something that we did vote on in May of last year. I do appreciate that you did reach out and connect. But I see there are other hands, so let's stick with Steve's presentation. I see Tom's hand, and if we could lower Effie's hand and Tony's hand, as they have already spoke on the topic.
Thank you. Steve, thanks for the presentation. I guess my question is kind of a follow-up to the question about up markets and lower inflation, right? So if markets are up, and I believe I heard you say in some markets at least 7%, and in other markets as high as 20%, and with inflation down from roughly 9% to roughly 5% now, I appreciated the hard 12% comment, right? And the sort of anxiety that comes with that, right? But I guess my question is, with that happening, right? So inflation coming down and markets seem to be rebounding, right? How, I guess the question I have is, what do you anticipate, or what does anyone anticipate the short-term impact, or perhaps even year, 2 year, 3 year impact on BERS assets under management?
I think longer term, the markets will recover and those prices will move higher and the assets under management will correspondingly move higher, Tom. If that's answering the question correctly. Right now you raised some good points. Inflation's come down. It's directly moving where the Fed wants it to go. My gut tells me that the market is overreacting. In particular, the bond market overreacted a bit to the disruptions we saw last month in some of the regional bank issues, Silicon Valley Bank and Signature Bank being the two most noteworthy. And when I say I think the market's overreacting, I think it's pricing in too much optimism for the Fed to start reducing rates. So there's actually an expectation that the Fed is going to have one more hike, probably in May, if not June, and then start cutting as soon as July. And I don't see that in the data, and I certainly don't get that from the rhetoric or the positioning or the summary of expectations, projections from the Fed. So my personal belief is the Fed will hike one more time. I think they'll pause, but I do think that they'll probably be on hold, leaving rates where they are. Again, if they get to that 5 to 5.25% level for a longer period than the market's pricing in. Those cumulative rate hikes will also have a negative impact on earnings, which will be reflected in stock valuations, I think, over time, and economic growth, which will slow. So I think, like I said, I hate to be downtrodden. Again, what I try to focus on is the long-term returns that we can deliver. But I do think in the short run, it's going to be a volatile 2023 and perhaps going into 2024. I'd say in the same magnitude that we experienced last year.
Thank you. And I think the very quick follow-up I will have to that, because this is talking about the lag that you mentioned, right? So the Feds raise, hike rates a little bit, or make adjustments to policy, and then it has to work its way through the system, right? And so from what I'm hearing, the full impact of these rate hikes, etc., really can take upwards of a year or more to be fully felt in the system. Am I correct in that? Because I think the question I have is, how long is the lag, or how long should we anticipate that lag being?
Tom, that's a great question. So I don't think we're really clear on that. We know there's a lag. We think it's probably shortened given the increases in technology and how quickly these things the economy moves today. It's probably 6 to 12 months versus 12 to 18 months. But again, we started raising, I should say the Fed started raising rates in earnest in March of last year. It's been just a little over 13 months. And again, there's been significant increases in rates really coming from that zero bound to about 5% at this point. So I do think that there's going to be more impact on the economy that we have not yet felt.
Thank you. I appreciate it.
And it's also very interesting. So I'm in front of you as a chief investment officer in a public pension plan that has a very, very long-term investment horizon. I'm trying to remember this. I read an article in the Wall Street Journal in 2020 about a woman named Irene Triplett. Forgive me if I'm repeating myself, but Irene was actually the daughter. She was the last surviving beneficiary of a Civil War pension. Her father actually was a teen who fought for both sides of the war, but ultimately got a pension plan as a Union soldier. At 83, he remarried a much younger woman to help care for him. But because he had a pension and it was in the late 1920s, early 1930s during the Depression, he was hot property. And he actually had another child with this woman who lived until she was 90. So that's just an example. That's a 153-year period where these obligations, these promises were still out there. So we have a very long-term investment horizon, and you as trustees have that responsibility for thinking long-term. And I remember early on, I was in front of one of the other boards, and one of the gentlemen asked me a question. The trustees asked me a question. He said, well, wouldn't it be great if we can get our performance on a real-time basis on our iPhones? And I said, respectfully, why would you ever need that? You're long-term investors. And he gave me a perfectly good answer. And the answer was because our beneficiaries are asking us these questions. So we go through these processes. We talk about short-term performance. Even 1 year performance is probably too short. But because I know you get questions from participants and beneficiaries, it's worthwhile to have these discussions. But we should always try to tie this back into the longer-term performance. I think Antonio, in his remarks earlier, did an excellent job really focusing on the long-term performance and the impact that some of the changes that have been made and the portfolio decisions trustees have made, have the positive impact they've had on this portfolio. But again, I think if you're focusing on the long term, that's the right time frame. But I'm very respectful of the fact that you as trustees ultimately have decision rights on everything that happens in your portfolio. We take direction from you, and any fiduciary responsibility I have comes down through the trustees. So I'm very respectful of your role and the information that you need to make those decisions consistently over time. And we're hoping that once we've developed a more routine methodology, getting in front of the trustees and presenting things in a more of a consistent way, that you become much more informed in terms of what we're doing and what the portfolio is doing and how it's acting in different conditions over time. So again, it's more of an investment in long-term thinking.
Thank you. Any other questions for Steve? Are there any other questions for Steve? I don't see any other hands. Thank you, Steve, for your presentation to the Board of Trustees.
So if I can just conclude, I just say thank you for having me today. And I do encourage, I appreciate Tony's comments earlier, and I know we've got great representation on the thought leaderships. So we've put a lot of time into, I believe we've got General Petraeus this Friday, who should be a real treat, and I'm anxious to hear what he has to say. So continue dialing in, and we'll promise we'll try to make it interesting every Friday morning at 10 a.m.
Thank you, Steve.
Thank you.
Appreciate that. Our next agenda item is calendar item 21, approval of the net zero implementation plan. May I have a motion to consider?
So moved, Tom Shepard.
Second,
Tom
Anita
Shepard.
Garcia.
Second, Anita Garcia. Antonio, can you please tell us about this resolution? Antonio? I see him here. For
Yeah, I
some-
just saw him in his office just a second ago.
Just gonna run over real quick.
You gonna do that? Okay, Alex, thanks.
Thank you. Dude, thank you all for your patience. While we wait for Antonio, I will say at 6 o'clock, Tom and I spoke. I do have an emergency meeting that was just called this afternoon with my union, so I have to go chair that meeting. Tom will take over for me, so I just wanted the board to know that.
Apologies. Was doing something else. So, yeah. So this is just last month the Bureau of Asset Management presented their net zero climate action plan for the fiscal year. We have some questions. John Edwards, and we are in favor of approving the net zero climate implementation plan. I think the bigger things is that it has 4 main pillars that will disclose emissions and risk, will invest in new climate solutions, will engage for alignment and action, and then will divest to de-risk in instances where we are not, in instances where we cannot get changes from the managers or companies. Like I said, we are in favor of approving the plan, and generally happy to take questions.
Are there any questions? I see Tony and I see Effie. Tony?
You're on mute.
Hate when that happens. Antonio, question in terms of, theoretically, and it's maybe my fault, I need to dig into it a little bit deeper, but, theoretically, I am supportive of this in general. But there is going to be an impact, right? And of potential divestment. I know this is not a divestment plan, but there should be some kind of impact. Otherwise, why are we even discussing it, right? There's going to be an impact. What was from the public markets, what did the divestment from fossil fuels cost us in performance?
And so I think 2 things on that. First, we've done some analysis on that, and we're actually going to present it at the executive committee on Thursday. Okay. But to answer your question generally, and do you want just for those portfolios, or do you want it on a whole portfolio standpoint? Because it'll be blunted on a whole portfolio. So, for instance, it is our best estimate that we're looking at annualized in U.S. equity something like 50 to 60 basis points annualized in performance. In international equity, something similar. And so you're talking maybe 50 basis points annualized on call it 40% of the portfolio. So just in multiplicative, call it 20 basis points is our best estimate. Right. Obviously, no real impact in fixed income, right? For like sector effect is just not that important, or it kind of is blunted by, certainly changes in the yield curve, changes in yield generally. So that's our best estimate. And again, that's early, right? Like, that's 1 year, a little bit more than a year. So BERS did its first. The U.S. divestment in 2021, 430, excuse me, and then by the end of the year, so 12/31/2021, and for our active managers. So that's the impact there, right? But certainly I don't believe that's going to I'm not sure how analogous that is to kind of this plan,
right?
And so I think that's really the bigger point, where certainly the first 3 pillars aren't aren't asking the board to take action with regard to divestment. And so yeah, so my take is that's what our effect is, and we'll have bubble charts for you all on Thursday. But that's kind of the of that, and that's the fossil fuel divestment. But I don't see, like I said, I wouldn't say that they're analogous.
No, certainly. But so I guess the question is, in our, I assume part of this is in our IPS, right? So we're not hiring new managers that would potentially have anything in that portfolios. Do we have existing private managers that are engaged in and can we estimate what impact would be if we had those managers divest from that portion of the portfolio?
Yeah, the best you can do, I think, is, and I think BAM Risk did this before, is that kind of you can look at changes in go forward or volatility is probably, or tracking error, excuse me, is probably the best that you can do with regard to those type of measurements. But my take is generally that right, like it's another, like I'd say the first portions of this are mostly corporate governance based, right, versus kind of portfolio based, right? So I don't know if there's going to be changes into the portfolio versus directions on corporate governance and directions on how we think about managers versus changes in the holdings of the portfolio. We have Allison here, certainly can talk more about it, but that's just my take on the plan, is that certainly for the most part, it's corporate governance and kind of question and engagement based versus a potential changes into the composition of the portfolio.
So can I just jump in to
I was actually going to say that, and as you may answer some questions that others may have. Yeah.
Great. I don't want to ask any other. I'm not asking a question. I just want to respond to Tony, if that's okay. So the private markets exclusion in the plan, first of all, does not do anything to impact existing managers. It's new managers only, and it's not. It's either asking those managers to like only investing in managers who don't invest in extraction, fossil extraction, or if that's not possible, like giving us the an opt-out provision like we have for other areas in the private markets, right? So it's not, I'm hopeful that it will not exclude large swaths, or I don't think it will. I mean, I'm not, if Anash were on, he would say most of our private equity managers would say extraction is not good business for them anyway. But putting that aside, most the folks we work with generally agree to our opt-out provisions. So, I'm less concerned about that.
Thank you. So Effie, then Greg.
A little bit similar on the lines of what Tony said. Really, no objections. From a theoretical perspective, going in that direction. It's really like the fiduciary duty that kind of raises a red flag. How much are we willing to tolerate negative performance? Not necessarily negative performance in the sense of go down, but like a lower performance as a result of going in that direction. And what just Allison said, let's say, even if we like exercise some opt-outs, what is the opportunity cost of these opt-outs? I mean, they could be easily, especially for the city as a whole, in the hundreds of millions. And probably in the last year alone, we lost as a city probably hundreds of millions just from what we divested back, in 2021 or 22. So I'm a little bit struggling with this because, again, as a fiduciary duty, how can we make sure that the returns don't suffer when we implement this? I mean, none of us can predict the future. It could be brilliant moves. It could be horrible moves in retrospect, right? So the question is, how can we cautiously move forward without sacrificing performance and even opportunity cost? I mean, yes, great, we did 10%. Maybe we could have done 15%.
One thing I would say to that, Effie, and again, if you can make it for Salil's presentation, I think it's really important. And as we think about these things holistically, because from our vantage point, it's around, right? So we take active risk in the portfolio as of now, right? Like either through our managers or through policy. And if we look at our general active risk let's say in over the portfolio, we're not taking a ton, but let's say it's a tracking error of 150 basis points, give or take. That 150 basis points of tracking error. If we want to maintain a tracking error around there, what does that mean? Well, certainly in U.S. equities, we've essentially spent it all, right? We've spent almost all the tracking error just with divestment of the fossil fuel reserve owners, right? And so I think, and again, we don't have a formal risk budget, but how Salil's modeling is thinking about is that how do we incorporate other goals in a context where we only can tolerate a certain level of underperformance, right? Now, you can also have outperformance, right? Like certainly if we would have divested in 2011 or 2010, right, it'd be a very different story, right, with regard to performance, right? Like, and so if you take that time period where, you know, secular declines in energy prices, in oil prices, you know, look like geniuses up to that point. But to your point is well taken. And I think if we think about how we integrate our overarching goals into a tracking error or kind of volatility or tolerance for potential underperformance, it should be part of, again, maybe it's not a formal risk budget, but certainly a component of it. And like I said, Salil's been working on how do you think about that? Like how do you, you know, is it purely just tracking error or is it something else, right? And so, or what are the mechanisms by which you can incorporate some type of risk analysis into an overarching policy goal like this? So I don't think it excludes it because, you know, it is a component of active management. And you know, again, we don't take a ton of it, but there is, if the board's ultimately saying like, we like this plan, but we also want to make sure that it's not taking up too much of our active risk, or we don't increase active risk to that certain extent, then that should be incorporated to how we think about portfolio construction and asset allocation long term.
All right, I'm just going to say very quickly, like the last observation I have from the recent divestments we have, the way I see it, we did at least three things that hurt us. One, we increased tracking error. Two, we decreased returns. And three, I'm suspecting, I don't have the numbers, but I'm suspecting that we increased volatility actually. So we reduced returns and increased volatility, which is the opposite of what we would ideally like to do. Just putting it out there. I don't know what the right path is, but we have to be, I think, thinking about it carefully as we proceed.
Absolutely.
Let's see, Greg.
Yeah, that's my concern also, based on what Effie was just saying. Now, what I heard is, Antonio, you said you'd have additional information for the executive board.
Yes.
So I'd like to move, if it's possible, and if Donald's still on, chair, or either chair, I'd like to know, can we move this decision to the executive board where they're going to have some additional information on the risks associated, or is this something that has to be done by the full board?
It has to be done by the full board. It is not under the executive committee's current, the resolution authorizing the executive committee to approve a plan like this.
I would like to have additional information based on what you're going to share with the executive board on the risks. So I hate to do this, but could we make this decision after you've made that presentation to the executive board, and the executive board could then make a recommendation to the full board?
To be clear, I'm not presenting on the risks of this plan at all, right? Like
Okay.
that is not what I'm doing.
Okay.
Question was asked about what has been the effect of divestment to date, and that we're just answering that question. We are not opining, to the extent that we think that we should move forward with this plan. We're opining that we think we should move forward, but I'm not opining on the, you know, kind of those implications at all.
You're making a more general sort of.
Yeah, I'm answering
commentary.
answering a very specific question that was asked at the last meeting.
Okay. But still, based on what Effie's saying, I still have those concerns that what is the risk that's associated with this? And, you know, I'd like to have some additional information because there is a risk involved, and we're not clear at what level of risk that we would want to be able to take. We're not actually sure. So there's some serious questions. So I would like to have a recommendation from the executive board, or at least from the leadership, from our two chairs, sort of advising us as to, this is especially from the labor chairs this represents their membership. So
I am not in a position to. So if that's what you want, I would suggest that we have somebody from the bureau who actually worked. I am not in a position to opine.
Sure.
On those.
Sure.
I will say this. At last month's meeting, my question was around divestment and the impact as well. Hearing Allison's comments today on someone is unmuted.
Oh, yeah, that's nice. Oh, yeah, let me get back.
I can't mute. Corinne? Corinne?
You can sleep. You got ice. You can sleep.
That's his. All right, I don't broadcast that. Too much.
Yeah, I was.
We want you to hold out. No, I'm sorry.
If someone can mute.
Karen, can you mute her?
Right. Yes, I was saying, hearing Allison's comments today on this being future managers, is that correct, Allison? Versus it having an impact on investments that we've made already? I would be in support of this. To be quite honest, those were my questions at last month's meeting, in reference to impact. But hearing that it's on managers who we're going to invest with, future managers versus the impact on the entire portfolio and what we've already done, I would be in support of it.
Okay, that's great. Okay, that helps. Thank you.
Are there any other questions or comments? I did see some.
Yeah, I have another question for Allison.
Okay.
I got one too, if
Oh,
possible.
Sorry, Kari, you go first.
Yeah, no problem. Dom, I just heard your explanation because that was my concern, right? More just in terms of layman's, right? I mean, we are divesting in this. There are a bunch of folks who will be retiring within the next 3 to 4 years. What is that their returns look like? I know when Brad Lander said that he was doing this for the future of communities, I get that, but there are a lot of folks who at the same time we're relying basically on the way we invest and how our returns are. So what Effie and Greg said to some extent, and Tony, I was a little concerned with as well. Hearing from you, I understand from a labor standpoint, you guys are good with it, but I just sometimes think that we do knee-jerk reactions. We don't do things gradually, and then all of a sudden we forget about those who are going to be affected first, and the folks in my age group who may be retiring, and those are, again, the lowest paid folks. So I just wanted to say, trust me, I'm a full environmentalist beyond, but I just also sometimes have to look, I would like to see things done more in a gradual process. That's my layman's comment for it.
Yeah, Kari, your age retirement, you're about 32.
Can I,
thank you.
without jumping question line, respond to Carrie for a moment?
That's fine, Allison.
Okay,
and then,
great. So
before Allison responds, can I just say one point? Maybe she can add to the response in terms of outreaching to managers that have traditionally not been included. How does it impact for future managers, and as we try to diversify the future management pool? Is this going to have an impact on that? Also, I just was curious about that.
Sure. So one of the components of the plan, and I again want to remind folks, it's not a divestment plan, right? It's an engagement plan and an investment plan in climate solutions. But one of the big components of the plan is to direct the Bureau of Asset Management to develop a robust just transition plan. And for those who don't know, just transition is a concept that as we move to a net zero future, hopefully, and move to fight climate change, we have to ensure that communities that have been historically hardest hit by pollution, communities that have borne the brunt of climate change to date, whether it's through natural disasters or fossil fuel, the pollution that I just mentioned, as well as workers who, you know, fossil fuel industry is a very highly unionized industry, and a lot of the climate solutions and renewable industry has historically not been. And so one of the mandates in the plan is that Bureau of Asset Management develop a robust just transition plan as a follow-up and a piece of the commitment and implementation to ensure that we're doing whatever we can within our sphere of influence to mitigate any challenges and ideally improve conditions for historically underrepresented communities, for historically hardest hit communities, and for workers who are potentially losing what were good union jobs, and ensuring that any new jobs that are created are ideally also good union jobs. And so because that's a complicated thing to do, we didn't spell out how to do that in this implementation plan. As you'll see in the plan, it directs BAM to come back to the trustees by the end of this year with a proposed work plan on those components. We actually had a first internal planning meeting about that just yesterday. And to your question, Gregory, about you know, historically underrepresented communities in terms of our investment decision, I think the net zero plan is drafted in a way that it's sort of neutral in terms of MWBE investments, emerging manager investments. It is functioning in parallel to that program. We are working, and I think many of you know Taffy Ayodele, who's been driving this work internally, on developing much more robust goals around MWBE and emerging manager investments that we'll present to trustees, to the boards in the coming months for feedback, et cetera. And we see them as aligned and not in opposition to one another at all. And then what's also interesting, just a tidbit, is that what I learned yesterday in this meeting is that one of the demands of a lot of directly impacted communities, especially internationally, is around investments in climate solutions in frontier markets. And without, you know, I'm not the investment professional, so I don't know how to execute this or what we can do or what we can't. But what was interesting about that is I think there's actually alignment in terms of like the move and the investigating about what we can do in like the continent of Africa with a lot of the climate solutions investments and demands from folks who are really leading the fight for just transition. And so it creates a very natural ability to coalesce around dual priorities that I learned about yesterday that I thought was really interesting.
Well, could I comment before we move on? Allison, I appreciate that, and I always appreciate the explanation, but I will say as just a normal everyday citizen who doesn't get to sit on BERS, who doesn't get to sit on these things, that's not how you guys advertise it, right? And it's the same issue I had on a PEP meeting, that when we vote on things that only we know and the general public doesn't know, then we're getting hung out to dry. And if that is necessarily the case and is not a divestment, then we're doing a poor job of explaining it, because I think that's what everybody, maybe not everybody on this thing, but everybody sees, and that's the way Brad put it out there. And one little anecdote piece of that, if that's the case for me, I would really like to see us pay more attention to the ETIs and how they affect, you know, public housing, and how we could do more about that, because we're looking at all these other ancillary things, but there's stuff that we could take care of internally. But I appreciate you clarifying that, but I don't think that's been the public sentiment. And I think your office needs to do a better job.
I can circulate. I think that point is well taken. I think for the net zero plan, I think we worked really hard to try to message around investment and engagement, and I can circulate the public messages that went around, but I hear you entirely. I also think that when we do have the plan to propose on just transition, I think there's a real opportunity for trustees to stand up and for all of us to come together to like publicize that plan, because I think we will be one of the only pension funds that I know of who are putting together a robust proposal around just transition specifically as part of our net zero commitment. And I think it's worth celebrating and parroting. And also, like, I think I agree with you on ETIs. That's a whole separate body of work that we should talk about at a different time.
Hey, if there are no other hands,
No, got me, Tony.
yeah, we'll take Tony as the last question comment on this topic.
I know this is not a divestment plan, but the press release had, like, I think the third bullet point was divestment in the press release after teachers, and that's what leads my other questions. Can you share? I mean, teachers had tabled it as well, and I only know this because I sat for Angela on TRS. Can we see the red line of the doc that was done for TRS?
Sure, I can send you the final implementation plan that was passed by TRS.
Okay, cool. And the other question I had, and I thought Effie was going to ask the question before, and he didn't. But what about in situations we're seeing that a lot of the oil companies, traditional companies, are some of the biggest investors in green energy, and and this is, I guess, a general question. How do we kind of marry that situation where they're by being smart investors or hedging their bets or whatever it is, but that the potential there is that those folks are going to be in good position to be strong, strong in different portfolios.
So Antonio should jump in here because I wasn't around for the divestment discussion. But what I will say is, every year the board reviews a list of excluded securities based on the criteria that the board has established for companies that we don't want to be invested in. And, at such time that an ExxonMobil actually, becomes more of a green energy producer than a fossil fuel extractor, they will come off the list of recommended excluded companies because it's not a static list. It's not like in 2021, the board agreed to divest from these like fossil fuel companies, and then that is the list forever. Like the list is updated by, I think MSCI, Antonio, tell me if I'm wrong. I think MSCI and our risk team and Antonio's team reviews the list every single year to look at divergences from the prior year, to look at the volatility, if there's any additional risk, et cetera, and then brings the list back to the board.
Oh, that's a good answer. Thank you.
Thank you. I don't see any other hands at this time. We can vote on the approval of the net zero implementation plan. If you're in favor, please indicate that at this time.
Wait. I thought we were going to wait until after we got the.
No, Tony, no one made a motion to do so.
I was going to say, I would like to make that motion. I would like you guys, the board, to come back with some of these questions. And so I would move to table until after the next executive board meeting, unless that would create a lot of disruption. I don't want to create a lot of, if it could be done and we could have that additional information around the fiscal impact, the impact on bringing in minority, managers, and that analysis, if that could come back to us, then I'd be, but I don't want to create an unnecessary or unproductive delay. If you understand.
Agnostic in terms of, how the trustees obviously defer to the rest of the trustees on how to proceed at large. I do want to flag that I don't think there's any way for the team to be prepared for Thursday's executive board meeting. I think we need to understand what the questions are. They did present, John Adler and his team presented to the executive committee meeting in February. And I know he will be traveling later this week. So I don't think the team can get updated information for this executive board meeting.
Okay.
Yeah.
I would like to make.
No, I was going to say to Antonio, realistically, I guess the question becomes, is that something that we can actually look at impact without implementation?
Yeah.
If
Okay.
No, look, this again, I would defer to this question to the Bureau on that. And I said, you know, that's the plan that they developed. I, you know, certainly can kind of put the questions together, but and kind of collate those for folks that want to put them together. But I believe that the kind of analysis and the ultimate, you know, kind of questions about the plan are best addressed to the Bureau of Asset Management. And so from that perspective, yeah. So I think, yeah, we want to be able to do anything at the executive.
So based on what Donald just said, if we were to approve this and then found that it was having a negative impact, are we locked in for ever? I mean, what's something that we might find out later on is hurting our membership?
I think the trustees are always within our right to revisit any decision that we've made prior.
Okay. And then operationally, Antonio, would that something that we could do if we said, wow, this is really, we didn't anticipate some of the consequences of approving this, would we be able to come back and do a reversal?
Yes, absolutely. I mean,
okay.
And yeah, absolutely.
Okay, on that basis, yes. Okay.
So question becomes, Greg, are you still making a motion to
No, I'll
table
withdraw it. On that basis, I'm fine. I'll withdraw it.
Okay. Thank you, Greg. Effie, you raise your hand.
Yeah, Donald, I have a very quick question for you, actually, as your union rep. I'll put it this way. If I tell you, and I'm making a very big assumption, if we implement this program, right now we're at 8 point something for the birds in assets under management billion. In 2050, we will have $20 billion under assets under management if we don't implement it. And if we do, we will have 15 billion. How do you feel about implementing it? We're still going up, both cases. We didn't lose money. 20 versus 15 in 2050.
You said we would have 20. Let me understand the question. Go back, Effie. We would have.
If we implement the zero net, like the zero emission plan, and possible divestments that might surround it, we will have in 2050, like, you know, quite a while from now, $15 billion, which is almost double what we have now. $15 billion assets under management in the BERS. But if we don't, let's say we will achieve, we missed all kind of opportunities of opt-outs, and possibly maybe we would have invested, let's say, in Total and Shell that are very big on green initiatives now, but we didn't invest in them, so we lost on the upside. So we would have 20 billion basically in 2050 if we didn't do it. Would you be comfortable that we have only 15 and not 20? Yet we invested this way?
I would be highly upset that we didn't maximize our dollars because we didn't do it when we had an opportunity to do so.
And again, I'm not even giving a scenario where we're losing money, just like we could have had more. And this is a very possible scenario. I don't think it's completely outrageous what I'm saying. I think it's a realistic possibility. Of course, I have no way, I have no crystal ball. I might be completely wrong. It could be that we have 15 and the alternative would have been to have 10, not 20. It's very hard to tell, but this is like a possibility. That's kind of what's bothering me, to be honest. Like, how do we know that we're not taking the wrong step? And how?
Now, Effie, you had me leaning yes. Now I'm leaning no.
Yeah, I think though, Effie, to Antonio's point, this is going to be an ongoing evaluation of implementation of any type of plan. And the fact that we actually have the opportunity to at any time say, no, we're headed down the wrong path and direction.
Yes.
I'm comfortable with that. The fact that we can always retrack, look at this. I am in communication. My union does sit on NYCBERS. So I'm in constant conversation and communication also with the trustees there and from teachers as well. So I'm comfortable with constant conversation and constantly looking at this. I believe any investment that we actually make, we should always do an analysis to make sure that it's right for the system and for the members who we're investing their money. So I think this is no different. So I'm comfortable that we actually have an option to look back and say, no, let's slow down, let's stop this. I'm comfortable with that. Versus if we did not have that option, I would be very uncomfortable.
So Donald, could we attach something that says that we would want a specific report back to the board with an analysis of this specifically in a year? Or was that built in?
It's built in. So
okay, great. Okay, good. Thanks.
Yeah, I want to just, I know I keep harping on it's not divestment. I think the one thing I want to actually be clear on is to the extent divestment is mentioned in the plan, it says that if there are managers unwilling to engage with us to the extent that the Bureau of Asset Management believes they are not complying with our plan, the staff of the Bureau of Asset Management will bring that information to the trustees to assess a way forward. One approach could possibly be divestment if the trustees are comfortable with that and believe it falls within the fiduciary guidelines to do so. So no, this plan does not empower anyone in Bureau of Asset Management to make any divestment or investment decisions without the explicit vote of the board. I just want to make sure that's clear. And then
Thank you, Allison, for that.
So I'll stop.
And let me say this to you. I have an executive director who sits as a trustee at NYCBERS, but his pension is here at BERS. My pension is here at BERS. Nick's pension is here at BERS. Sean's is here. So we will be doing a careful analysis. And I see some other hands raised. Ms. Garcia, BERS member, right? So we will be doing a careful analysis as our retirement lies here too. With the members who we will be voting for. This is something that is personal to us as well. So just this is, I wouldn't be comfortable if we didn't have those options, again, because my own pension lies there. But the fact that we have an option to say, let's stop, let's pause, let's look at this, this may not be the right thing and we can retract, I'm comfortable with that.
Just trying to strongly exercise our fiduciary responsibility.
Yeah, I do appreciate. I will say this. I do have to make this comment, and then we'll go into a vote. I do appreciate the trustees here. I will say this group. I've been a trustee for going on 7 years. This group is engaged in the process more than any other group that I have saw. And so for me, I'm excited that you guys actually have a caring spirit. You want more information. That is exciting to me. And I couldn't say I appreciate you more. I know this is a part of the meeting here in the process that we're doing, but I will say this group is more engaged. And I saw Sandy actually put his thumb up because I sincerely say that and genuinely say that. I appreciate you all.
Mr. Chair, one question for us. Allison, I don't want to be flying the ointment here, and because we got momentum on this thing. But could you maybe describe what the changes were from the original document that the teachers put in, and would you be willing for us to, if you utilize that language? They're pretty smart folks over there, so I'm assuming that was pretty good stuff.
I mean, we're willing to utilize any language, obviously, that the trustees prefer. I think the primary change that the teachers trustees made is they made the date of the initial sort of assessment. You know, the plan requires BAM to come back annually to report on progress, and the for public markets with an initial recommendation of like who the recalcitrant for public and private markets in the plan. By the end of 2025, BAM is required to come back to trustees with an assessment, basically, of if there are managers who are completely recalcitrant and unwilling to engage, who they are, to begin the discussion of what we'd want to do about it. The teachers trustees kept that reporting period at 2025 for public markets and moved it to the end of 2026 for private markets. That was the primary functional change, and then they tweaked some other language that I don't have in front of me.
I would make the motion based if we could parody the language of the teacher's document.
If we are going to do that, we need to know what the language is, or rather, we need to make the updates here on the fly. I can open the document and display it for everyone, and we can make the updates, but I have no way of guaranteeing that this is identical or comparable to what teachers did.
If we could get the spirit of it, because I would second Tony's recommendation.
I see Tom has his hand raised.
Thank you. While I can appreciate, wanting to make sure that what we have matches TRS, I would just respectfully submit that just kind of doing it on the fly would probably be inappropriate, especially when we're talking about the type of plan that has long-term implication. So while I am prepared to vote to approve this net zero implementation plan, if we want what we do to align with another systems document, then it may not be appropriate to vote on this today.
I just would concur if we don't have that language in front of us, I'm not comfortable with voting on something that I don't have language in front of me to actually review. I mean, that's my only objection to that will be, if we have the language, then fine. If we don't, then
I think it's important to have these protections, because I think that if TRS, it sounds like those are the protections that we were looking for, that I was talking about initially, that we could make an assessment as to whether or not this is actually working out in the benefit of our membership. So even if there was something roughly that said, this is what we're looking for in a year, these are the kind of measurements that we would want to see, I mean, I don't think it has to be the exact language, but if it's something that opens that door, or can we approve this and then amend it after approval?
I would only, just for reference, make sure folks are aware that the BERS, the draft implementation plan that is before you now is identical, minus, the specific BERS numbers, et cetera, to the plan that passed the NYCBERS board. So that you know.
But we talk about TRS, right?
No, I'm saying the TRS amended their plan, made some tweaks to the plan. NYCBERS did not. So I just wanted to make sure folks were aware that the NYCBERS plan and the TRS plan are not identical. The plan before you is the same as the NYCBERS plan.
Okay. So it doesn't include the TRS language that Tony is mentioning.
Correct. The NYCBERS plan did not include the TRS language.
Could we add that language after adoption?
Is that possible, Alex?
Hi. So it's my understanding that this is open-ended and can be amended at any time. And I think the controller presented it in this spirit. Is that correct, Allison?
Absolutely.
Yeah, so I don't see any reason why not.
So if it could be amended after adoption, then I think we can move forward, and then just at the next executive meeting, we have that language and we just include it after adoption.
So moved.
Okay. So with that being said, we'll go to a vote.
Yeah.
All in favor of approving the net zero implementation plan, please indicate your approval.
I approve, Tom.
Hi, Tony.
Hi, Donald Nesbitt.
Hi, Greg.
Hi, Nick Soto.
Hi, Allison.
Hi, Anita.
Hi, Lily Chan.
Any opposed? Any abstentions? The motion carries. At this time, I will have to run to my next meeting to chair. Thank you all for chiming in tonight. At this time, co-chair Tom Shepard will take over for me. Have a good night, everyone.
Good night, Don.
Have a good night.
Take care, Don.
Could we have the record reflect that I'll be chairing the remainder of the meeting? So the next item on tonight's agenda is calendar item number 22, adoption of the actuary's determination for the fiscal year 2023 employer contribution to the New York City Board of Education and Retirement System. May I have a motion to consider, please?
So moved. Gladys Ward.
Thank you, Gladys. May I have a second, please?
Second, Nick Soto.
Second from Tony. Yep.
Thank you, Nick.
Got it.
Okay, we have the city's actuary here to discuss. Merrick, could you please tell us about this resolution?
Sure, and I'll be brief and just quickly a quick comment to agree with what Antonio said earlier about the cash flow, the negative cash flow being a good thing for the plan. When I was a consultant and when that happened with systems, we would congratulate them and say they were finally reaping the rewards of pre-funding and living off the investment income. So regarding in your board packets, you have my letter for the final employer contribution for the current fiscal year ending 2023. That's an amount of 234 million rounded. Prior to the start of the fiscal year, the Office of the Actuary provided a preliminary number, which was 226 million rounded. The board approved that number. The final number is expected to be different from the preliminary number due to data changes, improvements in valuation coding, or any new benefits. In this case, there's new benefits for the Tier 6 vesting going from 10 years to 5 years. That caused that was most of the increase in the $8 million difference between the preliminary and final numbers. So we're simply asking the board to formally approve the final amount to replace the preliminary amount that the board approved last year. I think you're on mute.
Chair, we can't
Tom, you're
hear
on
you.
mute.
You're on mute.
That's
You're
what
muted,
happens when
Tom.
you have two mute buttons. So thank you, Merrick. So at this time, I'll be, I'm sorry. At this time, are there any questions from the board? Greg, I see your hand up.
I think that was from before.
Okay, thank you. Are there any questions from the board? Okay, hearing none, let's vote, please. All in favor of adopting the actuary's determination for the final fiscal year 23 employer contribution to BERS, please indicate your approval now. I approve. Tom
Hi,
Shepherd.
Tony.
Hi, Nick Soto.
Hi, Lily.
Hi, Greg.
Hi, Anita.
Are there any opposed? Are there any abstentions? The motion carries. Next item of business is in attorney-client session. May I have a motion to enter attorney-client session?
So moved.
I
Thank you,
second
Tony.
Anita Garcia.
Thank you, Anita. Okay, so let's see. All right, all in favor of entering attorney-client session, please indicate so now. I, Tom Shepherd.
Hi, Anita Garcia.
Are there any opposed? Any abstentions? The motion carries. So the next item on the agenda is calendar item 23, adoption of the BERS Qualified Excess Benefit Arrangement Plan and Trust. May I have a motion to consider?
Gladys Ward.
Thank you, Gladys. May I have a second, please?
Marjorie.
Thank you, Marjorie. Alex, could you please tell us about this resolution?
Certainly. This is a proposal to adopt a trust document for an excess benefit plan for BERS, which will allow BERS to pay the full pension of retirees whose pension would otherwise exceed the 415 limits.
Thank you, Alex. Are there any questions or motions from the board? Yes, Allison.
Thank you. Can you talk to us about like how many members this will impact and what the what the cost is or what the amount is we're talking about?
Yeah, absolutely. Right now, there are no members that are impacted by this limitation. The actuary does check this every year and send us a memo. We would just like to get ahead of this as this is a compliance concern. The cost is, I don't have anything specific, but it is expected to be minimal. I don't think that deep system updates will be required at all.
Thank you. So are there any questions or motions from the board? All right, hearing none, let's vote. All in favor of adopting calendar item 23, adoption of the BERS Qualified Excess Benefit Arrangement Plan and Trust? Aye, Tom.
Aye, Anita Garcia.
Hi, Allison.
Aye, Nick Soto.
Audrey.
Any opposed? Oh, somebody sounds like they opposed.
Like me. I was going to say, that sounds like opposition, Tom.
Okay, any abstentions? All right, hearing none, the motion passes. The final item on this evening's agenda is calendar item 24, amendment to the Audit Committee Charter. May I have a motion to consider, please?
So move, Marjorie.
Thank you, Marjorie. May I have a second, please?
Second, Anita.
Thank you, Anita. Let's see. We have discussed this resolution at the last two board meetings, with the board unable to come to a consensus as to the amendments proposed. As a result, we're going to hold a vote on each amendment separately. Ida, could you please tell us about the first amendment? For trustees, this amendment is marked as Exhibit 1 in your packets on page 30.
Yes, good evening, everyone. I hope you can hear me okay.
Yes.
Okay, so amendment number 1 is to amend the requirement that the chair of the audit committee rotate annually to state that in the event that no audit committee members volunteer to stand for election, the committee may re-elect the incumbent.
Thank you. Are there any questions from the board?
I just want to thank everyone for changing this language to address the concerns that were raised at the prior. Much appreciated.
Thank you, Allison. Are there any other questions from the board? Hearing none, we will do a roll call vote for amendment marked Exhibit A1. This would amend paragraph 2 of the charter to specify that the audit committee is empowered to review any disagreements between BERS management and internal or external auditors regarding financial reporting and other matters. Alex, could you please call the roll?
Certainly. Karina Paulin?
I vote yes.
Thank you. I have to go with, I'm sorry. Lily Chan?
Yes.
Thank you. Marjorie Dienstag?
Yes.
Thank you. Anita Garcia?
Yes.
Thank you.
Hey, Alex.
Yes.
For the record, Kari Edwards is here.
I apologize. Yes, of course. Kari, can I have your vote, please?
Thank you, Tom. Yes.
Thank you very much. Cherie Gibson?
Oh, wait a minute.
Thank you. Anthony Giordano?
Sorry, yes.
Thank you. Naveed Hassan? I think he might be gone. Allison Hirsch?
Yes.
Thank you. Jessamine Lee?
Yeah, yes.
Thank you. Nicholas Sudo?
Yes.
Thank you. Alan Ong?
Yes.
Thank you. Mahisha Sapp?
Yes.
Thank you. Tom Shepard?
Yes.
Thank you, Chair. Gladys Ward?
Vote yes.
Thank you. Ephraim Zachary?
Yes.
Thank you.
Hey, Alex, just as a, you know what? I'm not even gonna say it. The motion carries. Ade, please tell us about the next amendment. For trustees, this amendment is marked as Exhibit A2 in your packets on page 31.
So, amendment number 2 is to state that the election of the audit committee chair shall occur at the second committee meeting of the year.
Thank you. Are there any questions from the board? All right, hearing none. Thank you. We will do a roll call vote for amendment marked Exhibit A2. This would amend paragraph 6 of the charter to permit the audit committee to re-elect the current committee chair in the event no other member of the committee wishes to serve as chair. Alex, could you please call the roll?
Karina Pollan?
Aye.
Thank you. Lily Chan?
Yes.
Thank you. Marjorie Dienstag? Thank you. Kari Edwards?
Yes.
Thank you. Gregory Faulkner? Anita Garcia?
Yes.
Thank you. Cherie Gibson?
Approve.
Thank you. Anthony Giordano?
Approved.
Thank you. Allison Hirsch?
Yes.
Thank you. Jessamine Lee?
Yes.
Thank you. Nicholas Sudo?
Yes.
Thank you. Alan Ong?
Yes.
Thank you. Mahisha Sapp?
Yes.
Thank you. Thomas Shepard?
I abstain.
Thank you. Gladys Ward?
Yes.
Thank you. Ephraim Zachary?
Yes.
Thank you.
All right, so thank you. The motion carries. Ade, could you please tell us about the next amendment? For trustees, this amendment is marked as Exhibit A3 in your packets on page 32.
So item 3 is to clarify the audit committee's responsibilities relating to external auditors and review of financial statements.
Thank you, Ade. Are there any questions from the board? Hearing up, you have your hand up, Anita?
Yeah, it's just I don't know where my hand is, but it's very difficult to hear her. Could she repeat?
Sure.
the
Ade, could you repeat
Yes.
that, please?
Yes, I apologize. So item 3, is this better? Yeah, so item 3 is to clarify the audit committee's responsibilities relating to external auditors and review of financial statements.
Okay, are there any other questions from the board? Cherie?
So what you just read is item A, exhibit A4.
A4, A3.
Yeah,
A3 says the election of the chair. And A4 is what says about these documents. So I'm just for clarification. We're on exhibit A4, voting for that, correct?
Yes, yes. The exhibits appear to be in a slightly different order than the resolution.
I think we need to be clear on exactly what's what. So A1, because the first two were voted,
Right.
were
So
passed.
A1 was to specify the audit committee would be empowered to review any disagreements between BERS management, internal, external auditors. A2 would amend the charter to permit the audit committee to re-elect the current committee chair in the event no other member of the committee wishes to serve as chair.
So A2 is correct in our packet. Go on.
Okay, so the one we are talking about now, this would amend paragraph 6 to provide that the election of the chair. Oh, yeah, now I see what's going on here. Thank you, Cherie. So in
So it's A4 that. So for what you
yeah.
said, it's exhibit A4, not.
So you okay? So I got it. So so exhibit A4, right? This is the one we're talking about now, right? This would remove the statement that the committee will review the audit report of BERS financial statements by external auditors. Additionally, a note would be added to indicate that financial statements preparation or reporting by external auditors is reviewed by the New York City Audit Committee, and that external auditors will report the results of their audit to the BERS board annually. Am I correct, Ade?
Yes, you are.
Okay. So that's what we're voting on. That was A4 in our packets. Thank you, Cherie, for the clarification. All right. So are there any other questions from the board regarding this particular item? So we're going to be voting on exhibit A4. Well, yeah, A4 here. I got it. We're going to be voting on the amendment, paragraph 7 of the charter to remove the statement that the committee will review an audit report of BERS financial statements by external auditors. So that's what we're voting on. So at this time, let's vote. Alex, could you please call the roll?
Karina Pollen.
Aye.
Thank you. Lily Chan.
Aye.
Thank you. Marjorie Dienstag.
Yes.
Thank you. Korea Edwards.
Oh, I didn't. You confused me. I'm abstaining on this one. Thanks.
Thank you. Gregory Faulkner. I think Greg is gone. Anita Garcia.
Yes.
Thank you. Cherie Gibson.
Approve.
Thank you. Anthony Giordano.
Aye.
Thank you. Allison Hirsch.
Aye.
Thank you. Jessamine Lee.
Yes.
Thank you. Nicholas Sudo.
Yes.
Thank you. Alan Ong.
Yes.
Thank you. Mahisha Sap.
Yes.
Thank you. Thomas Shepard.
I abstain.
Thank you. Gladys Ward.
Vote yes.
Thank you. Ephraim Zachary.
Yes.
Thank you.
Alex, could you please give us the results on this one?
I have sorry, I have 2 abstentions and
Unopposed. This someone's unmuted. Oh, thanks. There were 2 abstentions, 1 opposed.
I'm sorry, who was opposed, please, Chair? I think I missed that.
Cherie opposed.
Cherie, okay.
No, I didn't.
Oh, you didn't? Oh, I'm sorry. I thought I heard you say opposed. Then I stand corrected. I stand corrected. My bad.
I don't think anyone opposed. 2 abstentions.
Yeah, I have 13 in favor and 2 abstentions, Chair.
May I change my vote, please? I approve.
She said, don't put any words in her mouth. Don't do that again, Thomas Shepard.
I'm sorry. I didn't mean to put no words in. I didn't mean to put words in anybody's mouth. I'm sorry. I'm sorry. I won't do it again. All right. So the last item now is the final item is going to we're going to be voting on this one is to amend paragraph 6 of the charter to let's see, this would amend paragraph 6 of the charter to provide that the election of the chair shall occur at the first committee meeting of the year. Am I correct with that one?
I think, Chair, actually, this was voted on. I think the one that has not been voted on is to amend, is it paragraph 6 to permit the audit committee to re-elect the current committee chair in the
No, we
event
did
no
that
other
one.
member? Did we? Okay.
Yeah, we did that one.
So
The only
Ade,
one that-
just if you could just confirm which one is still outstanding.
Yeah, so the one that's still outstanding is A3.
Yeah,
The one about the election of the chair occurring.
first committee meeting of the year.
So, yeah,
Go ahead,
so the
Ade,
last,
I'm sorry.
I thought we voted on this already to be the second.
Right. There was a vote, but right,
So-
Effie's correct, because the vote just before was for the second meeting of their meeting, and that's why I got confused, because I was like, I didn't see that in the exhibits.
yeah, so what happened was this was supposed to be item 2 in the resolution or in the order that it was in the resolution. But when I read the first item to allow for election of the same person as chair, this exhibit was brought up by chair and that was voted on.
All right, so I need to pause here because I
Ade,
went down this list and it was exhibit A1, amend paragraph 2 to specify audit committee is empowered to review disagreements between BERS management, internal and external auditors.
I
The
see.
second
Okay.
one was amend paragraph 6 to permit audit committee to re-elect committee chair in the event no other member of the committee wishes to serve as chair. And then
We voted on that.
right, but this one is not the first meeting of the year. This one is just to allow for the committee chair to be voted in the event that no one wants to be the committee chair.
Right, that was the second one. That's exhibit A2. Right.
Right.
Then you read a third one. You
Right.
read a third one that's in your paperwork as the second meeting of the year, but in our exhibit packet, it says the first meeting of the year. And we voted, and they voted okay for the second, for the second meeting, but that wasn't in our exhibits. That's what I'm just saying.
Yes.
That's
so-
why I stopped quoting the. All right. Yeah. Always at the end. All right. Give me a sec. I'm trying to figure out how to structure this in a way where we can get through this last one. Because like we are at the end here and I'm just trying to figure out how to do this in the
Ade, which is it that would Ade, which is it that
Yeah.
you are putting forth? The second meeting of the year or by the first meeting?
So the resolution does state the second meeting of the year, which was proposed at the last meeting. So if you, Alex, I think the screen that you had up, if you go up a page,
that wasn't my screen though.
Oh, I'm sorry. I thought that was your screen. States that the election shall occur at the second meeting of the year, which was discussed at the last meeting. But in the exhibit, it states at the first meeting of the year.
So if we go by the resolution, we agreed to do the second of the year. The exhibit is just wrong. You need to correct the exhibit.
That was an FE amendment, if I recall.
Right.
I
And
think
there was
that's
some
what the board
concerns.
wanted.
and there were some concerns about that, whether it was at the first or the second meeting. Like that's why I
Yeah.
thought that, you know, this what we were voting on tonight was, you know, changing that, right? So that it was, but apparently we already voted that it would be the second meeting.
Right. And
Yeah.
what you said today, Tom, in your speeches was we voted on the second year. So that's what everybody agreed on. So, and that's what a day is presented. So it's just the exhibit that is wrong. So unless we want to take it back that we're not agreeing to the you know, they're voting on the second year, we just need to correct the exhibit, is how I'm understanding this.
The exhibit doesn't, the exhibit is not really what has legal effect, but what the board voted, right? So as long as the board was clear on what it voted for, we will make sure that the written resolution is consistent with it.
Well, and I think that's the question right now, right? So could we be specific about what that is?
Or can you poll the trustees to state whether they understood it as the second or the first?
When I read the resolution, I read it straight from, not from the exhibit, but from the resolution, and I did present it as the second meeting of the year.
Okay.
So I believe that was the understanding of what was voted on.
Okay. So let's run down the list. If I just want to make sure that we're cleared. If everyone did everyone understood that it was the second meeting?
Yes.
Yes.
All right.
Yes.
Yes.
Okay. We got consensus on that.
Yeah.
All right. So we can move on from that. So we all understood it to be second, Alex, the second meeting.
Yes, that's what I heard, Chair.
Okay. Very good. All right. So,
but there have been 3 votes, so we still have an outstanding
right.
item.
And well, but that's the thing. This last one was, and what's the last one here? Because
Dave, what remains to be voted on, please?
I think we're done.
yeah, because I'm looking here and it was, all right. I get it. So
We voted 4 times.
I don't recall us voting 4 times
Yeah,
though.
I think
We did it 3 times.
We voted 3 times.
A1, A2, we skipped A3, we went to 4, and then we got confused.
Right. And the deal was that, you know, it was the second month, not the first. But going back here, the 4th item is the one we just voted on. So,
if I may,
okay,
Maybe
of
we're
the
voting
4
twice.
items, which one has not been done yet, right? So we
the
have,
4th item, if I may, I went by the order of the resolution, right? And the 4th item was, you know, to empower the audit committee to review disagreements between management and internal auditors. That was the last item in the order of the resolution that was to be voted on. So I read off the first 3, and the last one was going to be this one regarding the disagreement.
A lot of food.
all right. So I just want to make sure I'm correct then. This would amend paragraph 7 of the charter to remove the statement that the committee will review audit reports of BERS financial statements by external auditors. Additionally, a note will be added to indicate that financial statements preparation and reporting by external auditors is reviewed by the New York City Audit Committee, and the external auditors will report the results of their audit to the BERS board annually. Is that where we are?
Tom, that was already voted on.
So
And
so I don't know what's left then.
so what left is what was just on the screen. Sharon, could you please put that back up? The first page of the charter.
We need to get this
Item
straight.
A, that the committee is empowered to review any disagreements between BERS management and or external auditors regarding financial reporting and other matters. That was the only item that was yet to be voted on.
All right, can we vote on that one, please? And then I have a suggestion. Can we make sure that like these things are correct before we get to a board meeting? Because
Yes, Chair, I
because
apologize.
we just spent like 20 minutes trying to get it
Yes,
straight.
I'm very sorry, Chair.
Thank you. Okay, so are there any questions from the board regarding this item? Hearing none, can we, Alex, could you please call a roll call vote on this item, please?
Karina Pollen,
Aye.
thank you. Lily Chan, Lily Chan,
Aye.
thank you. Marjorie Dienstag,
Yes.
thank you. Corey Edwards, I think Corey is gone. Gregory Faulkner is gone. Anita Garcia,
Yes.
thank you. Cherie Gibson,
Approve.
thank you. Anthony Giordano,
Aye.
thank you. Allison Hirsch,
Approved.
thank you. Jessamine Lee,
Yes.
thank you. Nicholas Sudo,
Yes.
thank you. Alan Ong,
Yes.
thank you. Mahisha Sapp,
Approved.
thank you. Thomas Shepard,
I approve.
thank you. Gladys Ward,
Approved.
thank you. Ephraim Zachary,
Yes.
thank you. That's unanimous, Chair.
Thank you. Okay, everybody, we got there. So that concludes the agenda for this meeting. The date of the next meeting of the board, excuse me?
Motion to adjourn. No, I'm
Oh,
sorry.
yeah, I just need to let everybody know that the next meeting of the BERS Board of Trustees is scheduled for May 9th. And I was going to ask, did I have a motion to adjourn? And I heard Tony say yes. Do I have a second, please?
Second.
Anita.
Okay. Thank you, Anita. All in favor of adjourning the meeting, please indicate your approval.
Aye,
Aye.
Ellen.
Aye.
Aye, Lily
Aye,
Chan.
Mahisha.
Aye, Cherie.
Aye, Marjorie.
Mahisha Sapp.
Aye,
See you all
Corinne.
tomorrow night.
Aye, Tom. Is there anyone opposed?
Yeah.
Okay. And any abstentions? No? All right. So thank you everyone for being here
Good night,
tonight.
everyone.
And we are adjourned.